Welcome to another episode of I Own a Business, where we focus on helping practice owners grow the practice of their dreams. I'm your host, Dr. Steve Vargo, and I don't think my next guest needs an introduction, especially if you're an IDOC member, and probably even if you're not an IDOC member. I'm talking with Nathan Hayes today, and Nathan is IDOC's Associate Director of Financial Services. And as a lead-in, if things like inflation and rising payroll costs and what numbers should I be tracking and what do I do with them, if things like that are keeping you up at night, you came to the right place, because that's what we're going to help you sort out. So, hey, Nathan, what's going on?
Hi, just exciting times in the industry.
It certainly is. You and I, what was it, a couple of weeks ago, we were at Vision Expo West. And we had a dinner and we sat down and you went up to the front and you sat down and there were no slides, just your notes and a spotlight on you. And you delivered a presentation called "The Sky is Not Falling." So before we get more into the specifics of what we're going to talk about, I was just curious if you could give a little bit of a recap. What are the key points from that? Why is the sky not falling?
I think that fundamentally it's this. We're in a country with an aging and growing population, with a pool of eye care providers, whether it's optometrists, ophthalmologists, that is not going to keep up with the demand for care. And so whatever other pressures we see on the eye care space from either major industry players or the managed care environment or even the just macro economy, short to intermediate term, probably long term, I think those fundamentals don't change, and the demand for eye care is going to be such that, private optometry is going to be fine. That would be the Cliff's Notes version, and we can dig into some of those areas in this discussion if we want to.
Are you hearing that less, that there's too many eye doctors out there? Because for a while I seem to be hearing that as new schools were going up, but the numbers don't align with that, and I'm actually hearing it a little bit less now.
I think that's right. I think people are realizing that there's just hiring is hard everywhere, and certainly the rural practices have always struggled, and you always get the one-off that just bad luck. There's 6 providers in a town of 10,000, but no, I hear it less. I mean, if you look at, we have a pipeline problem in the profession, just broadly speaking. Even with the new schools opening, the number of seats being filled hasn't gone up that much. So yeah, and couple that with the fact that I don't want to be too gendered in this comment, but like 65-70% of new optometry grads are women, and just statistically, they're not all going to have the same choices for work life. And frankly, the young guys don't necessarily want to work 4 to 5 days a week either. So even if you're putting more optometrists through school, you're not necessarily getting the same number of patient care hours out of them.
As that leads into maybe some of the more specifics, we want to talk about benchmarks. So it changed directions here a little bit, but not completely. What would you consider, as someone who works with, closely with practice metrics, some of the benchmarks that practices should be tracking? Part B of this question that just came to my mind is, we're talking through the changes in the industry, especially around payroll. What's changing with the benchmarks? We used to have kind of these foundational metrics that we would look at, but now is it changing that much? Let's just say with rising payroll cost or rising cost of goods.
Cost of goods, no, because the markup formulas will usually take care of that. I mean, we're going to talk about expense ratios, and just remember, listeners, that you might have cost of goods, so what you spend on your lab bill, your contact lens distributor, your frame bills, but that's being divided by the revenues of the business. And usually when there's an issue on the expense side, I'm actually going to start on the revenue side first. Especially with the amount of managed care we deal with. If something breaks in your revenue cycle in terms of getting paid by a third-party payer, a lot of times that explains the changes there. So I'll say that. Again, cost of goods, if you're keeping up with your markup formula, if your wholesale cost goes up, your retail price is going to go up. Yes, managed care eats into that somewhat, but I think that piece I haven't changed that much. Change that much. The interesting thing on payrolls is that, yes, wages are going up, but there's also a labor shortage, and so the two have more or less to this point. And again, there are going to be cases where payroll's gone up and it's just gone up, but I think that the most practices have less staff; they're just paying them more. So most practices are still sort of struggling to hire and maybe a little understaffed. Yes, wages are going up. I think the challenge is I just don't know where it lands. And that's true for doctor wages as well as staff wages. And we're just in a muddy time. And I think that we're going to have to see when things stabilize where we are and practices will retool. One thing I observed, just I was thinking about it for this conversation. We talk about benchmarks. I mean, benchmarks are a reflection of what most practices do. So they're reflective of what's happening organically in offices. And so I don't believe in shooting on people's practices. Like I can't tell you what your practice should look like. I can tell you how you compare to what's normal.
So we don't have to edit. That's
SHOULD.
All right. Just
I don't believe
listening.
in shooting on practices. Yes, it's a kind of risque.
I've heard you say that before, so I know what you
risque
said.
Risque play on words.
Dangerously close to it.
Dangerously close. I also don't do the other thing to practices. We try to be very positive with our members. But so most practices intuitively kind of know where they want to go. And a lot of my job with benchmarks is actually just affirming, yes, that's the right decision. The metrics back up that you need more staff, you need more space, you're due for a new OD. Sometimes it's to say, hey, this just looks out of line, let's figure it out. But usually it's that. Honestly, if you wanted to know the most important benchmark in a practice, it's is your schedule full? And there's just no substitute for filling the schedule. And a really interesting, just quick back of the envelope fun thing to do is look at the number of comprehensive exam slots you have a day times what your average revenue per exam is, multiply it by how many patient care days you have a week, however many weeks a year you work, and then come up with a number that if your schedule was completely full, what your revenues would be. And for most owners, it's shocking. I'll tell you this right now, 5 days a week, 14 comprehensive exam slots a day, 48 weeks a year at $300 per exam, which is below average, that's $1 million in production. And I've had conversations with owners where we were really frustrated. The associate's revenue per exam just was nowhere close to the owners. And you go look at their metrics and the associate's producing 1.2 million just because they filled the schedule. So that would be, if you want to know metrics to track that are outside sort of the financial statement side of the world, just fill the schedule because revenues are everything. And you know, it's hard not to make more money and be more profitable if you're growing your revenues. It's possible, but it's hard.
The issue of cost of goods, I don't know if you've heard the same thing, but some of the early concern was that if I raise my price, patients are going to be aware of that and they're not going to want to pay those prices. My personal feeling is everything's gone up.
Yeah.
From groceries to going out to dinner, to gas, to everything you play. So I don't think there's as much sticker shock to things as there used to be. Would you agree?
Yeah, there's certainly some commentators in the sort of media space that want to bang on corporations for just price gouging. But the reality is, if your inputs get more expensive, businesses can't sustainably just eat that cost. So I agree. I haven't talked to anyone whose patients balked at prices going up, and everyone knows. We're all complaining about it and looking at it, and so I agree with that. I don't think it's that big a deal.
So I know there's not one absolute answer to this, but the topic of payroll, because that's a big part of big benchmark, your staffing.
Mm-hmm.
And with the challenging environment that we're in right now, where we used to say before, if you're booked out for a certain period of time, let's figure out a way to see more patients, hire more staff,
mm-hmm.
Get more, build up your employee base. But that's become more challenging. And a lot of the commentary we'll hear is that, well, even if I hire people, they don't stick around very long. They're not very good. What are your thoughts? I mean, again, I know this is individual for each practice, but
yeah,
there are a lot of practices saying we're going to operate more lean.
Yeah.
And we're going to cut back. And for some, they've used it as an opportunity to drop some vision plans and do things maybe they wanted to do before, but just saying it's too much of a struggle to try to deal with the staffing. So we're going to operate more lean and make the best use of that, versus the office that is booked out for weeks or months that really needs more staff. What is the balance there? I mean, what is the right answer?
I think there's a lot there. Let's take the vision care plan piece first. So you're scheduling out 6 weeks, you're struggling to staff yourself, and trying to, again, like the labor market it wasn't great before COVID. It's a lot worse now. I don't know when that fixes itself, but it stands to reason that over time it will come to something more like normal. So again, we're in a moment of time where we're still in the COVID moment and unwinding stuff that happened there. And I don't know how long it's going to take, but we're there. So it's not, none of this stuff is, I think, forever, but it's, is it another couple of years? Maybe. It does make, at some level, if you just don't have the capacity to see all the patients that want to be seen by your practice, it can make sense to just say, you know what, yeah, we're going to fire, the patients that are, we're just going to focus on the patients that are the most valuable to us, that we enjoy seeing the most, what have you. I think one of the things I've been learning in my consulting and partnering with some financial advisors is there's another layer of that, like do your long-term financial planning too, to make sure that you're on pace to meet your goals. So I've had owners who I work with, it's like they suddenly grew to 6 locations across state lines. They had this huge complex operation. And you kind of ask, like, did you really mean to go there? And they really didn't. They were just running scared and they never stopped to ask how much is enough. Other owners who just don't want they don't want the complexity of having a bunch of staff. Every staff member you hire is one more human being time bomb that could blow up your culture. And so they just don't want the complexity of that. And I think if you're going to intentionally keep your practice small, I think the real burden is just make sure that you have a savings plan to meet your long-term financial goals. And you're not just making a decision now about convenience and not thinking about the long-term implications. But if you can, that's a different way to answer that question. But if you want to, if you're in that space of wanting to keep the practice small, do the long-term financial planning, make sure that you're on pace to save enough to sustain your lifestyle into retirement. Because not only are you going to have less income to save and build wealth over your career, but your practice also is just going to be less valuable. And very few people are going to sell their practice for enough that it really like funds their retirement. Although it's a big asset, I don't want to minimize that. But if you're going to intentionally stay small, it stands to reason the practice is worth less. Like your duty to save is going to be stronger and harder. So, what else was in that question?
Yeah, no, it did. And you mentioned a few times now meeting your goals. So if Nathan Hayes owned an optometry practice right now, what would you set as your goals? Maybe both short term and long term. What would you target?
Oh gosh.
Because I bring this up because a lot of practice owners try to build bonuses around this, and it might be a quarterly goal, it might be yearly, and sometimes it works, but other times the struggle is, well, we set a goal, but the staff didn't do anything differently. In your process of helping doctors set up some kind of an incentive plan, which I know you get that question a lot, is there anything that you and I know it's a leadership issue too. Sometimes it's not so much what the objective is, but are you driving the process?
Well, yeah, so there's sort of leadership staff goals piece and there's owner goals. Owner goals, I think, I'll frame it around how much income do you want or need to be taken out of your business? How much control of your time do you want? So free time versus making more money, and then just managing the stress of ownership. So that's one thing. And by the way, revenue growth may not be part of that goal set, in which case, you sort of shift away from that. And that's what we're talking about in terms of cutting vision care plans, throttling back the practice just based on staffing and other issues. So you're going to have to be real creative about how you measure stuff within that if you're focused on patients. And then you get into standard of care and maybe revenue per exam being the metric you're tracking. So, hey, we're going to see less patients, but we want to make sure we're delivering a higher standard of care to those patients that are willing and able to pay for it. And maybe that's how you measure it. Online reviews, retention, some questions in there. If you ask me in a vacuum, like, hey, what's the right growth goal for a practice? And I'm almost never going to just sort of baseline, oh, you should just keep your practice flat and make your current income. Like, I just don't think that works. For seasons it can, but I think in the long run, you're going to have to focus on growth at some point. I'll usually say that 2 things. One, the goal needs to be enough that it forces you and your team to change and do things better or different. And so a lot of times when practice set goals, they just set them way too easy. And if you have an incentive tied to it, it just becomes effectively a raise and no one has to change. They just show up and they're going to achieve that. So it needs to be enough that you have a 50-50 shot of hitting it, and you can talk about, we have to do things differently if we're going to achieve this goal. I like to set goals in dollars too, and usually I'm going to say something in the $100,000 to $200,000 a year of revenue growth collected. And then what I'll say is, back into that and say, okay, at this revenue per exam, we need to see this many more patients a week, and then go figure out how you're going to get more patients in the door and keep the schedule. Again, come back to filling the schedule. But it also could be, we want to increase our standard of care and have higher revenue per exam. But that's a starting point there. I think percentages are just confusing to people. I had $600,000 office emailed me a year ago or so and say, should we set our growth goal at 6 or 8% or 10%? It's like, nah, let's go for 30, and that's where dollars start to make more sense of it. So I hope that helps on that.
Yeah. And my issue with goal setting has always been on, getting beyond just setting that, the goal itself, which is really just a lagging indicator if what you're doing is working or not, or are we hitting it? But a lot of times what I'll ask, because I get those questions too, well, we're going to set a goal for X% production growth or what, multiple pair sales. Okay, great. What are you going to do? What is your staff going to do that's going to drive that result? And that a lot of times you just get a long pause at that point. Well, I don't know. I just thought they would be incentive enough that they would do something differently. Do what differently? Like clarify what exactly they need to do.
Yeah. You and I are both big fans of Chip and Dan Heath, and they have this idea of like, you have to map the path for people. You can't just throw it out and say, hey, just go achieve. I mean, you need to be much more granular in terms of what are the action steps your teams need to take to get there. And the other thing to think about is most of your staff really probably aren't that motivated by more money. I mean, they're not going to say no, but I have a hunch that most bonus plans work not because the incentive really changed behavior, but because the staff actually had measurable result areas that they were conscientious enough that they wanted to achieve. And it's the measurements that drive results as much as the incentive.
If I were selling a practice in 5 years, because we talked about goal setting, and it's always a different discussion with somebody who's 30 versus somebody who's 60.
Yeah.
Right.
Although it's really, this is a really good discussion. Wherever you are in your career, you should be thinking at some level at your exit plan and just kind of having your practice ready to go, because we have had owners who got a car accident, couldn't work, got severe illness and couldn't work anymore at a younger age than expected, and having the practice sort of ready to transition is a healthy thing on that. But finish your question. I'm cutting you off.
So
sorry.
Yeah, no, that's very true. At any point in your career looking at that, what does that, what The Infinite Game, I think, is a book by Simon that focuses on that. If I'm selling my practice in 5 years, if I'm in that point in my life, what would you advise me that I need to change or focus? Is it just growth? What is my where does my focus need to be at that point in my career?
Yeah, two things. I mean, at that point, it's one, know your number in terms of where you are from a savings standpoint and where the practice needs to be, because that could either give you permission to coast into retirement, or it could be lighting a fire to say we need to push this practice forward and get it to be worth a little more when it comes time. So that's one thing to be thinking on. The other thing is, and this is I think a lot of owners miss this, you need to make the practice depend less and less on you. So I worked with an owner it was a sad story. Her husband had terminal cancer. She's looking to transition. And her intuition was, well, I should just work hard for the next 6 months to pump up my number so I can sell it. And I said, you got that backwards. You should hand off as many patients to your associate as possible, because if you're not going to be there anymore, whatever revenues you're driving, no one's going to assume they're going to keep anyway. And as it happened, by doing that, we actually persuaded the associate that she could carry the load on her own, and she ended up buying them out. So for most owners, we're going to focus on two areas. One is that patient care, getting the owners far removed or having a plan to sustain the revenues and patient care hours post-exit for the owner. And the other piece is management acumen. And are you keeping all the intelligence about running your practice in your head? Just put yourself in the shoes of a new owner. Not necessarily private equity, but if you're selling to a private OD, is the team in place that knows how to run your practice going to be there? I touched on the owner who's looking at buying a practice, and the sellers intended to take all the staff with them because they had 2 locations. It's like, well, that doesn't work at all. Like, you can't $1 million practice. They're going to take 5, 6 staff out, and what's the seller going to do? Come in and see $1 million worth of patients with no help? Hire and train a staff from day one. So just think about the transferability of your practice. Can someone else step into there and generate, expect to generate the same results or better and be positioned to grow? But patient care hours is a big one, and then management knowledge on that. There was another question you'd asked earlier that maybe we come back to on, like, how do you deal with staffing right now? And so one answer was a question of, like, do you throttle the practice? Do you not grow and just deal with it? The other one is, if you're limited on staff and their wages are going up, the burden becomes you've got to hit on your employees, and you have to be creative on getting jobs done. So there are practices, there always have been practices that pay above whatever the average wages are to just attract better people. And I know not every market's going to have better caliber candidates that you can just pay more for, but there are practices that just know, hey, we're going to pay 45,000 a head or 50,000 a head, and we're going to make do with 1 or 2 less staff than a practice our size would normally carry. But our team is so good that we can do that. So that's one way to approach the labor market. The other one is just look at how you can outsource stuff. So, billing and revenue cycle management would be one area that a lot of times you'll spend less outsourcing that to a firm that's very efficient at it than you would on an internal biller who is maybe at risk of leaving the practice and just may not do as good a job. So you can get creative in terms of what can you outsource from the practice. Certainly within IDOC's realm, we have a bookkeeping service that maybe we'll get to eventually where, hey, you could just outsource that and pay us $450 a month as opposed to having a manager do it without however much over time, or our inventory management service was take over a third of an optician's role. So there's areas you could delegate and outsource to help patch over a lean team. And in some ways on that transition discussion, actually have a more stable system for running your practice for the next owner.
And I do want to ask about books and benchmarks. Before I get that, since you've started doing that, I did a podcast several episodes ago. If anyone's listening, they can go back and find it. I think it was the second one we did with Haley Stewart, who's on our finance team. And I think it was called The Biggest Blunders People Make on the metric side, on the tracking their financials. So you don't need to elaborate as much as we did on a 45-minute podcast, but working with doctors, and especially now you have more visibility to their books, in a quick summary of what have you seen as some of the biggest mistakes that you see?
I think so. Maybe I'll answer a little different. Not so much mistakes, but just reality. So one, we've certainly learned that whoever's doing the books, whether it's CPA, the doctor owner, even or a manager, very few of those people are actually gifted at keeping books and doing double entry bookkeeping. So mistakes abound on the balance. You would kind of expect it with owners. You got an optometrist trying to do double entry bookkeeping. Like, you're not trained for that. So things, but even managers who may have a little background, like a lot of times you're just, guessing your way through QuickBooks, and there's some technical skill to that and knowledge to do it right that can come back and bite you. The surprising thing has been many of the CPAs doing books. I mean, they're really just there to produce a tax return. And so they're not keeping books in a way that's reflective of your business. That's just an observation on the mistakes. I think where I'd come at it, I've had a couple of conversations with owners in the past couple of months where the owner is very much like, I want to be doing my own books. I feel in control when I do it. I know that it's reconciled. And by the way, one of those owners, they weren't actually reconciled. But and so I asked the owner, like, hey, do your books mean anything to you? Does your P&L mean anything? I have no idea what this means. So you're doing all the work and it doesn't tell you anything about your business. That doesn't really square for me. So I think with financial statements, the thing to realize is you have to file taxes based on your income. And that's a number that's important and interesting. But your financial statements can be so much more in understanding your practice. So, just having a coherence to how it's laid out that makes sense for eyecare and helps you benchmark your practice against other practices, using the 7 key expense areas as categories, helping owners have visibility on what their actual income is. Because the thing about a lot of books is the way we do payroll, you can't tell how much the owner's making. You got one lump sum payroll number that has staff, associate doctors, owners, and you look at the P&L, I have no idea how much the owner's making. And just to split out your income as a separate line item and then have the other profit items so you can see, oh, I'm making X from my business is really helpful. And it's one of the areas we add value. I think the other one is just cash flow and understanding cash in the business. I mean, interestingly, most owners sit on, in my opinion, way too much cash. And I understand post-zombie apocalypse COVID that people are feeling a little defensive. And there are people who are saving for a down payment on a building, fine. But your practice, like extra cash in your practice right now in an 8% inflation environment, it's reckless. That money is just losing value sitting there. And if your business doesn't need it, you're far better off getting, one, just get it out because you're being taxed on it, most of you. And, it's not helping your practice. But two, someone's just demonstrating the value of the business. Get the money out, put it to work. And put it, one of the reasons that and I'm not a financial advisor, so talk to your own wealth advisor, but one of the reasons you invest in the stock market is to protect the value of your money by putting in assets that are growing faster than inflation, or historically do. Right now, not so much, but over time, that's why you do that. And right now, it's a deadly time to sit on cash.
So this brings us full circle as we close out here. We talked about payroll and the struggles with hiring staff and what should we outsource and what should we really focus on, getting back to 80-20, right? What's the 20% of the things that as an owner, they really need to focus on that's going to drive the most results? I think this is an obvious one. After talking with you and I'm talking with Haley, the number of mistakes, and as you described it, the reality of just doctors were not trained in this. And there's some things are good enough, and this may not be good enough in terms of the relevance of being able to track and utilize accurate numbers. So if you're not a CPA or a financial expert or
frankly, even if you're a CPA, like a bookkeeper is a different role.
Mm-hmm.
And
no, I meant if you're not. I was being sarcastic. If you
Okay.
don't have that level of expertise, and most have a CPA, but can you elaborate on that a little bit too? Because I don't know if people realize the difference now that you brought it up.
So a CPA is going to focus their time on understanding the tax law and how to prepare returns and know like what's deductible, what's not, what are strategies for mitigating taxes, and just planning for taxes. It's really focused on that tax question. If you look at your agreement with your CPA, they're basically telling you like, hey, we're going to take what you give us and just spit that in a tax number. So even if they're doing your books, they're taking what you give them, whether it's a shoebox of receipts at the end of the year, and reconstructing it. And again, I don't want to be too broad. What we've seen is a lot of CPAs, if not most, just try to get to a tax number. And so the financial statements they produce don't really tell you anything about how the business is doing and help you understand its expenses. So that's I think how I'd answer that. And then of course, like if you got owners and managers doing it, you're just guessing at that, and everyone's balance sheet's wrong, and I'll tell you they're all wrong because you just make up your inventory number. Oh, we have 600 frames and the average cost is $70, and so we have 42,000 inventory. And it's the reality is as much as people worry about the state of the profession, I'll say that the vast majority of practice owners are fat and happy, and I know they are because their financial statements are all wrong, and it doesn't matter. They're all doing fine. They're making plenty of money. Their practices are profitable and cash flowing. And again, maybe there's selection bias for the doctors that want to talk to us, but I just don't see that many owners that struggle to pay the bills. You do see them, but it's not that common.
So just for those who aren't aware, IDOC launched a service called Books and Benchmarks, and that's what we've been alluding to. So if we could just close out here, Nathan, just tell us a little bit more about how that works. How do you work with clients?
And maybe the story is this, like the best data set for overhead and productivity benchmarks that I know that's public was the MBA data set from Essilor and then CIBA Vision in the late like 2008 to 2012. That data was being compiled. I know there's other consultancies that'll do some benchmarking, but there's really not. I just wanted a more up-to-date set on overhead, profitability, productivity. And the conclusion, having worked with doctors for over a decade, is we had to control their books to trust the numbers coming out. And frankly, like also, this is a service that doctors need help with. If the owner's keeping it to themselves, their manager's doing it, it's being done poorly and rarely, and so we could add value to practices by just keeping their books. So we will, in Books and Benchmarks, it's bookkeeping and benchmarking. We will do monthly reconciliation of your accounts and QuickBooks and categorization of expenses. We'll give you support with payroll in terms of adding employees, dropping employees, making sure the benefits match up between your payroll software and your financial statements. And then we're taking all that data from our members from both the financial statements and the payroll database and running benchmarks on overhead, profitability, cash flow. We'll be adding in the next module will be around, what are your labor ratios? What's your revenue per non-duty staff? How many patients are you seeing per non-duty staff? What's their average pay? How do you benchmark different wage scales for different roles in the office? So having control of that data or having access to it just gives us a rich live data set on what's happening in practices that we can report back and benchmark and be smarter for ourselves and help our members both contextualize their business and make better decisions. I mean the reality is most owners call me and they're concerned about expenses. Most practices don't need to cut costs. In fact, most practices need to spend more on their businesses. And coming back to the labor discussion, if you want good people, you're going to have to pay more for them. It's just reality. And so, using your benchmarks can help give permission to spend money in some ways, and also help you understand, like, hey, if we're going to spend more, what kind of results are we looking for? That comes back to the goal setting discussion as well.
Where would people find out about Books and Benchmarks?
IDOC.net/books and benchmarks, I believe, is the URL. And certainly if you're an IDOC member, talk to your practice development manager. You can reach out to me and I'm happy to tell you more. The service is $450 a month for IDOC members, $550 for non-members. So even if you're not an IDOC, we'd love to help your practice and support you there. There's a one-time fee for setting things up and just getting everything configured to our system, but would love to talk more about it. We've got over 75 locations signed up in the past 10 months or so. So very excited about that. We've just added 3 new bookkeepers. So we're growing this side of our business. The uptake's been great. Our financial statements are excellent. Even owners that did well are like, oh gosh, this is so much easier to understand. I really like this. So even if you feel like you have a handle on it, it may just be that, and maybe especially if you have a handle on this, there's stuff in your practice that's probably a higher order thing that you should be focusing on than this. So there's my pitch to owners everywhere.
Well, thank you, Nathan. Thanks for your time. I always enjoy picking your brain on the topic of math.
Oh, yeah, we didn't do much today, but it's fun. And again, I'll just say most owners intuitively land where they need to be. So your practice, the sky's not falling, guys. Your practices are broadly fine. It's a choppy moment, and the profession's healthy as far as I can see.
The sky is not falling. Great place to close out there. So
very positive.
Well, thanks so much, Nathan. Really appreciate your time, and appreciate anyone who's listening. So if you would like more information about IDOC and Books and Benchmarks and how we work with ODs to help them grow their practice, you can find out more at idoc.net. So thanks, Nathan, and thanks everyone for listening.
Thank you, Steve.